Hi, my name is Jason Watson, Watson CPA Group. Casual day here at Watson CPA Group. Today we're going to talk about small business bookkeeping. This is a common question we get often, or at least it's a discussion we find ourselves having often with small business owners. First question out of the gate, QuickBooks or Excel? Okay, you don't need QuickBooks or you don't need formalized accounting for most I shouldn't say most small businesses, for a lot of personal service small businesses. Let's say you're a consultant, let's say you're a doctor, let's say you're an engineer. Commonly, you just get some checks in, you have a few expenses that go out. You can probably maintain your books just in Excel. All you're doing is recording transactions. You got a date, what the transaction was, payee, the amount, and the category, the account. We can take your Excel file and synthesize that into a tax return very, very easily. So you don't have to run out there and go buy QuickBooks. If you do buy QuickBooks, we suggest QuickBooks Online. QBO, yes, it's more expensive and it's a subscription and all this monthly fees and all this stuff, but it's nice. You can look at your financials anywhere in the world. I can look at them. You can invite us to go look at your books as well. We can collaborate on that stuff. So QBO, QuickBooks Online, is where it's at. No more upgrading and what version are you on and all that stuff. Also consider professional bookkeeping services. So if you do find that you want to use QuickBooks because you have a lot of transactions coming and going, you want to record all that stuff and have it be accurate, Bench.co is one of the partners that we suggest. They're actually a Canadian bookkeeping firm. All they do is bookkeeping for small businesses. They're great and we recommend using them. You can check out their website for the pricing that they have. I am a hobbyist electrician, if you will. I wired my own house. It hasn't burnt down yet, which is good. I did the plumbing too, so maybe if it does burn down, the plumbing will just put out the fire. But I remember I had a couple of questions from my friend. My friend Rob is a contractor, electrical contractor, and I was like, hey, I got this thing, I got this situation, I'm not sure what to do here. And he told me, hey, electricity is a profession, it's not a hobby. I don't want to say accounting is a profession, it's not a hobby, but if you do find yourself in a situation where bookkeeping is consuming a lot of your day, you'd rather go sell or close a deal or do work than bookkeeping, then maybe it is time to get that professional bookkeeping service. And if you do, Bench.co is a good place to start. All right, now we do want to go with, let's say, Excel or QuickBooks. What kind of chart of accounts do we want to have? How many expense accounts do you want to have? Keep it simple, please. You're not IBM, you're not Google, you're not having 10 pages of expense categories. Most small businesses can probably operate on 10 to 12 accounts. So keep it really simple. Most single person small businesses aren't necessarily using their financials to make operational decision making. They're usually just putting financials together for ultimately the tax return. So if you don't need your financials to help you make operational decisions and to see where you're spending the money the most and maybe drill down into granular details, keep your chart of accounts fairly simple. We can help you out with that as well. We can give you a sample that you would like to use. So what is the purpose of bookkeeping? Well, ultimately, we have to get to a tax return, okay? One of the things I'll do to put the fear into business owners who don't do a good job of bookkeeping is I'll just say, hey, I fear that you're not getting all of your business deductions. Ultimately, your taxable income might be too high because you're not recording your transactions correctly or on a timely basis. So the purpose of good small business bookkeeping is certainly taxes. Creditworthiness, if you're going to attempt to use your business to buy a house, get a loan for the business, all that stuff, they're going to want good financial records as well. And then selling, expanding ownership. If you and I are looking to go into business together, you're already established, I'm buying into your business, I need to see the books, I need to have a good feeling what the value of the business is so we can join forces. So then the other thought everyone has is cash versus accrual. QuickBooks is always going to default to accrual-based accounting. Accrual-based accounting is necessary at times. It is primarily based on one of the principles in accounting called the matching principle. We want to match revenue when it was earned, and we want to match expenses when they were incurred. Okay? And accrual does that because you might take on this expense in December but not pay the bill until February. Well, you should really recognize the expense, the burden in December. However, having said that, again, most small businesses could actually benefit from cash. Let's also talk a little bit about cash and accrual and how they relate to each other. Theoretically, over time, cash and accrual should converge, meaning that if you took 50 years of history, 100 years of history, I know I'm getting a little crazy here, but your cash method of accounting and accrual method of accounting should almost be identical from a net income perspective. Timing differences versus cash and accrual. So let's say you do say, that accrual stuff, I really don't want to mess with it. I just want to record expenses when cash leaves my checking account. I want to record revenue when cash comes in. What will happen sometimes is somebody will give you a check on January 2nd, but they'll also issue you a 1099 that includes that amount from January. So they mail the check December 31st. They put it on your 1099 that's going to get issued to you. You get it January 2nd, so they're deducting it. Do you have to show that as income the previous year because your 1099 has it in there as well? The answer is no. Typically, we will have an expense category and adjustment called timing differences, such that you can still recognize your income when you receive it on a cash basis, not necessarily what a 1099 is sent to you in issues or has on there for the cash that you received. There's also hybrid system, cash versus accrual. Typically we see this again in smaller businesses where we want to be cash everywhere except we have inventory. So we do have beginning inventory, we do have purchases, we do have ending inventory to determine our cost of goods sold. The IRS does allow a hybrid system with cash and inventory. Inventory, by definition, is an accrual-based accounting, if you will, but you can do a mix match, if you will, between cash and accrual, namely inventory. Also, the problem with accrual can very easily be fronting tax on income. So let's say you issue an invoice to somebody and you start doing the work and doing all that stuff, and you don't get paid until the following May. So you issue an invoice for $50,000 in December 31st. You recognize that income because your accountant says you're accrual based. You need to recognize that income. And the customer doesn't pay until May. Well, you had to front tax on 50 grand in April on your individual tax return, assuming, let's say, you have a pass-through entity. But let's say in May, that $50,000 invoice is written down to $40,000. The customer's upset, you negotiate, and it's $40,000. So now you pay taxes on $50,000. You only got $40,000 in cash. You have to wait a full year to realize the reduction of income through a bad debt deduction on the write-down of that invoice. Another reason why cash is sometimes preferred over accrual is because of the fronting tax on income. So that's the kind of the cash versus accrual discussion. We commonly see most people just doing cash. It makes sense to them as well. Cash leaves, expense. Cash comes in, income. All right. Time and billing systems. A lot of attorneys and other folks, maybe property managers and all that, they'll have a separate software application that sort of helps with time and billing and invoicing and all that stuff. And all these things say we interface with QuickBooks, it's seamless and all that. Nothing interfaces with QuickBooks easily or seamlessly. That they fool people with that, and it's not true. So what we commonly will like to see and we find success in is let's have your time and billing system do time and billing. Let's have it do invoicing. Let's keep all that separate from your financial accounting. So you're an attorney, you're entering in your time and billing, you send an invoice out, the customer complains, okay, you negotiate, all right, you get a check for $1,000. Now we recognize that $1,000 as income over here. We don't let this time and billing system, which usually gets kind of murky and muddy with rogue invoices that haven't been voided yet. It gets a kind of a mumbo jumbo over time. If we just keep that separated and only recognize income when you get that cash in hand, it keeps you from accidentally paying tax on phantom income. So on time and billing systems, we do like to see that kept separately. Yes, you can try to interface it with QuickBooks. I'm sure there's several people who are very successful at it. I'm not sure the juice is worth the squeeze. So anyway, small business bookkeeping, QuickBooks or Excel. I would say half the clients that we have just use Excel because they have simple transactions. Chart of accounts, keep that simple. What's the purpose of financials? And then cash versus accrual. If you want to discuss these items more, give us a shout. You can look at our website, wcginc.com. You can check out our book. You can email us, call us. Again, my name is Jason Watson with the Watson CPA Group. Thank you.